Hello and welcome to today's episode. Very excited to have Jesse Abrams on today's episode, the co-founder and CEO at Homewise. How's it going, Jesse?
Great, Nick. Thanks so much for having me.
Yeah, it's a pleasure. So, how we like to kick it off is to start by learning about your company. So, can you please tell us a bit about Homewise?
For sure. In the most simplistic way, what HomeWise is working to do is making mortgages better. Clients apply online in about 5 minutes, and then we use these forms of data intelligence to actually match our clients with the best mortgage options from 30 different banks and lenders. And unlike some of the other guys that might just focus on rate, we actually provide clients a full overview of the best mortgage option for them, providing transparency into the lender type, the rate, and the key features that will actually save them the most money. We don't just leave them off from there and say, hey, go fend for yourself. They're actually set up with a personal advisor from our team from there to take them every way from approval to move in or close if they're a renewer or refinancer. Overall, the goal is to make the process faster, easier, and more transparent than ever before, and hopefully save our clients the most money possible. And one of the nicest things about all this is that it's completely free for our clients as well.
It sounds like you did that pitch more than once, Jesse.
I have done it quite a few times at this point. That's one of the joys of being a startup founder is you live and breathe your startup. I have a 9-month-old baby, but this is my other baby as well. And I always have to talk about both of them.
Well, you do a great job at describing it in a nutshell. So kudos. Could you tell us about how it got started? How you had the idea of launching Homewise?
For sure. So I always joke that I've dreamed about getting into mortgages since I was a young child, but that would be
Doesn't everyone? Like
totally. It's Ninja Turtles, Spider-Man, Batman, and
mortgages.
We never learned about mortgages in high school or even university. I'm a McGiller, so I had my good years in Montreal as well. And I was a commerce grad that you never even heard the word mortgage other than in reference to the term interest rate. But what does that even mean? And I spent my early part of my career working in marketing and advertising, working at places like General Mills, where I headed up their digital marketing department. But before I started HomeWise, I was actually running the digital and account side of an agency. And one of our biggest clients was one of Canada's largest banks. And they came to us and they said, we really understand boomers. We really understand Gen Xers. But when it comes to first-time home buyers who are generally millennials, it's just not a marketplace we really understand. So after a long data study, we uncovered two very obvious things. One, well, first-time home buyers don't understand mortgages. Close to 90% of first-time home buyers don't even understand the basics. On top of that, when lenders speak to them in terms of rate, it's just really confusing. So our goal was really to figure out a way to make it so much easier without getting the nitty gritty of how the campaign didn't work out with the lender we worked with. I learned a lot over that 2-year span about how many VPs we had to go through, how slow moving the process was, but overall, how the banks really just didn't seem to have the best interests of the clients in mind. And now banks are great. They're our partners and they do have their place, but there just isn't that transparency overall for the client. So when I bought my first home, which is actually the original HomeWise office and where I am right now, I knew I wasn't going to go directly to my bank and I wanted to shop around. Went to those rate aggregation sites that just confused the heck out of me. Ended up having a call with a classic broker that took an hour and a half. Then got sent a 4-page Microsoft Word document to print, fill out, scan, and send back. Ton of back and forth. I just never knew where I stood in the process. And when I was finally told who my lender is with, the only words were the name and the rate and no explanation why. And that was the classic there's got to be a better way moment. And I just saw there was such an opportunity to help first-time homebuyers, as well as all homeowners and homebuyers across Canada and eventually the world, really find a simple way to get the best mortgage. And that's where the initial idea came, and we've so far built that into HomeWise over the last few years since launching.
That's awesome. Yeah, it definitely. I've experienced that as well. The mortgage process. I didn't know of HomeWise. I at least here in Quebec, what I found just searching online was Nesto that you probably know about. And yeah, indeed, it's a strange thing to experience to go through, and it ended up being very paper driven for me, and I went the more traditional route. Although through COVID, nonetheless, and just the processes for them was a bit destabilizing because they didn't have that online infrastructure set up efficiently. So it was quite complex. So you have a marketing pedigree. How do you go from a marketing pedigree to then launching a fintech startup, navigating the regulations, the legal aspects, and diving into the complexities of mortgages?
Yeah, it's a great question. And one of the things I always say is the key to that is building an amazing team. So my co-founder Carlos has over 30 years of experience working in the lending space. He was COO of one of the largest banks in Brazil called Itaú Banco. And here he headed up operations at HSBC. He was chief risk officer and head of operations at Mogo and Snap Financial. So a ton of experience in the lending space and the regulatory space. So for me, I didn't just sit back and relax and let him do it, but we partnered on things. And he had a ton of experience in that area. We also had a principal broker on our team who really understood how to launch a business. So building an amazing team, especially from a co-founding and early founding team members, is so integral to any business really getting on the right foot. Because listen, my skill set might be in an area that is totally different than his, which it really is with myself and Carlos, my co-founder. He's basically a yin to my yang, where he's totally back end and I'm totally front end. And it's been exceptionally helpful in launching our business and having our success grow over the last couple of years.
Well, that sounds like you found somebody with a great level of experience who joined on with you from the get-go. How did you connect, and how did you meet and then like decide to go into business together?
It was a little bit of luck and a little bit of timing. He used to work with a member of our team and saw he came over to Homewise. We had a 30-minute chat that turned into a 3-hour conversation in which he just said, "Hey, I love what you're doing. Let me work with you. Let's see what happens."
Because
And
him, when he was young as well, he watched Ninja Turtles but dreamed of mortgages.
exactly. He actually had like day and night. Mortgages was always on his mind. And it's a funny thing, but he has a real passion for this space. So where I have grown my passion because I love solving problems and I love that we're able to help out clients, especially in a time of need. You mentioned yourself, mortgages are not only complex on the day you get the mortgage, but in the lifetime of the mortgage. There's a lot of articles these days of unfortunate situations where people have $20,000 and $30,000 penalties with their mortgage because they chose the wrong lender. And we always try to help people with that. So he had that innate knowledge about how we could really help people out. So it was just a really lucky situation. Worked together for a month, and I'm like, how could I let this guy go? And we've now been business married for over 2 years, and it's been an unbelievable marriage for us because we just work so well together, and we have such corresponding skills that work really well with each other.
That's great. I'd love to get into the past founding phase after 2018, but first, I just want cover all our bases and check in before founding Homewise. Is this your first company, or you had entrepreneurial adventures before?
Yeah. So before founding Homewise, I actually divested an agency with a partner of mine and sold it to a company in the US. And I had equity in that business. So when I actually did leave that company, I sold my equity, and that's what I used to actually build Homewise. So bootstrapped for our first 7-8 months based on the money I made from selling my old agency. And that was a great learning for me, because when we built that original agency, it was basically being built from a bare bones level to a much larger level over a 1.5 year span. So learned a ton just about building teams, business management, financial management, acquiring new partners, acquiring new customers, all those different things that were exceptionally helpful in starting our business. And Carlos as well, my co-founder, he's had a ton of experience building businesses as well. As an example, Mogo, he was there when they went public and was part of just hiring more people on a team. So it's really paired well together for us to figure out where we could be much more efficient and what are the key learnings that we might have had from the past as well to help us become more successful and focus on the right areas of the business, rather than maybe having that beautiful downtown Montreal or Toronto office, saving some money in that key area and focusing in other areas.
Okay. And so was then the agency your first business?
It was, I'd call it my first baby that I had in terms of building a business and starting from scratch. And it was a really cool experience. And a lot of the relationships that I built from then are helping us out with different projects we're working on now, such as some of the creative ads we make and just overall building our business. So every place I've worked, it sort of collaborated to today. Even the first job I had, my CTO I worked with at that point, that's 12 years ago, and as well as our front end developer. So I brought people from throughout my career to be part of our Homewise team, which is the number one most important thing for us.
That's neat. So you brought all your baggage with you, the positive and I guess the lessons learned into it, and people too. So when you started off then Homewise, what did the first couple of months look like? You said you were trying to bootstrap, so I guess you're trying to
Yeah.
get your first sales right away. Could you tell us about that experience?
Yeah, it's the first couple months of the startup are interesting because every day is a brand new journey. So the first few months were compliance, getting our license set up, getting lenders signed up, seeing how many different lenders would want to work with us. Then a great suggestion I got from one of my friends who runs one of Canada's largest fintech companies was create a version of your website in PDF form. And that taught us so much about our business because I sent it out to 50 people of all different ages from 22 to 68. And they all provided different advice. As an example, Canadians don't like to give their social insurance number unless you're a very well established business. And even at that
True.
point, it could be tricky. And those were some great key learnings that we got in that early phase that help us build out the technology for our application and then start to actually go to market. So while we all quit our jobs at the end of February of 2018, we didn't launch until the end of July 2018. And that's when we really went to market. I think I sent every single person I've ever known in my life an email and a LinkedIn message and a Facebook message and an Instagram message saying, hey, this is our business. This is our family and friends code. If you're interested in getting a mortgage or know anyone it is, please let us know. And that's how we really established our first year in terms of getting some clients, getting some partners as well, because we've been partnering with companies like Borrowell and Sonnet Insurance since that point, and really starting to establish the core of our business. And then we actually raised our first pre-seed round in November of 2018 to really set us off and start us on our way in January of 2019.
Wow. So it sounds like you guys moved pretty quick. In the so if we look back at 2018, what did the online mortgage space look like? You were probably one of the first movers, but you mentioned there was online comparisons. I'm guessing like a rate hub type of thing. What did it look like then, and how were you able to stand out with all the noise?
Yeah, the marketplace in the past, and which is still there, the incumbents over the past few years have been rate aggregation sites like Rate Hub, Rate Spy, Lowest Rates. And those are great for a certain group of people, which are more rate sensitive, people who are just focused purely on rate. And that's a marketplace. But we realize that that's not going to be our core competency. Our core is first time home buyers and the halos that come from that, because we work with a ton of renewals, refinancers, switchers. We realize that there's actually a study that was done by the CMHC, which is the Canadian housing body. And their study found that 52% of people are more interested in advice and having a really strong journey and feeling like they got the right suggestion than purely focusing on rate, because they might have realized they made the wrong mistake in the past, focusing only on rate. And we still get clients amazing rates. We still get them that, but we try to focus on a fully holistic mortgage and pull in clients' information and then give them an option from there based on what their unique profile tells us. Because what we always say is you go to these rate aggregator sites or even these low rate sites that have started to pop up recently, and they show you your options after knowing your first name, last name, and down payment information. But like, would you go to a shoe store with someone who's the same height as you and the same shoe size as you and have the exact same shoes on the wall as them? Well, probably not. And you probably wouldn't just want to have one pair of shoes on the wall. So we always try to do is have multiple options for our clients. And that's how we really try to differentiate ourselves. And we have been able to is by focusing on that more holistic overview of the client and providing them the right option for them today, but over the lifetime of their mortgage as well.
What are some? I'm curious to know what are some of the things you've learned now being a mortgage expert, essentially, that have surprised you and that most people don't know. I've gone through the experience. I think I know a thing or two about mortgages now, but what are the underlying truths of mortgages that would surprise people?
So I'm going to preface this by saying we have a lot of banks we work with and we do love our banks. But what I really surprised me is how many people think that going to their bank is going to be the best solution from a mortgage perspective. And to be fair, there are some situations where going to your bank is the right solution. And we work with great lenders and we sometimes will push people to those banks. But what we always say to folks is bank doesn't mean best, because people have this perception that if it is a big bank, everyone knows it, so it's going to be the best solution. We always say, look holistically in the marketplace at companies that are like credit unions or monoline lenders. And these are companies we've all heard of, like Desjardins as a great example, Duca Financial, MCAP, some names you might not have heard of, but they all offer mortgages in that space. Like my mortgage is with a credit union as an example, because the rate and features were strong, but also I wasn't sure if I was going to have my mortgage for the full 5 years of my term. So if you break your mortgage early with a credit union, the penalty is substantially lower. I'm talking like potentially 5 times lower than it would be with a larger financial institution. So that's one thing I realized, is that people are very bank heavy, and they always think that bank is best. And many people don't know the other options. The other thing I realized is how many people are really love to get advice throughout the process and want to make sure they feel like they're getting the right decision. So while there are these rate sites where people could click on a rate and that's what they try to get from there, I find I very rarely work with clients, but when I did in the past, I remember there was a client who actually cried to me on the phone because they weren't able to get approval from a mortgage because they went directly to a lender at that time. And we found them a different solution. And she just didn't know that those other options were out there, that there was advice that they could get to make the right decision. So those are two real eye openers for me in terms of the overall market. And then the other thing I've really learned is that first time homebuyers are a massive demographic in Canada. And even though I did that study before I started the business, I'm still amazed by how much there's just that lack of knowledge base, because it's a difficult process to go through. So it's just, that has really helped us teach our advisor team on how to provide the best service possible and really help people out at each step throughout the process.
Okay, cool. So now, like, moving into the Homewise journey, let's go like 1 year in. What are some of the milestones you guys achieved after your first year after founding the business? Run us through a bit of the history up until today.
So this is now almost a year and a half ago, but I remember the first time we saw the word billion on there. And when we reached our first $1 billion worth of applications, we're like, wow, so people are really using us. And this is now long in the past. We're now in the probably close to $10 billion worth of applications that have come through.
That must feel pretty wild, like knowing that much volume.
It's crazy. And to be fair, not every application results in a funded mortgage, but it just shows that people are willing to use these online processes. Because if you ask someone 10 years ago to input their financial information online, they might not have done it. But companies like Wealthsimple, Borrowell, Sonnet, all of these great Canadian companies have really shown people how fintechs could help so much in the process. So that was one really cool milestone to us. Another one was earlier this year, we actually expanded across Canada. So now we're available for all Canadians, no matter where you are in Canada. And that was a really big milestone for us, because we have international aspirations as much as we have Canadian aspirations. And being able to be a national company and a national brand and helping people across Canada has been very big for us. And of course, just overall team growth and raising rounds of financing, things like that have been really, really big for us. And just in terms of realizing the scope and opportunities we have and bringing on some really amazing people along the way.
So let's talk about that a bit, because as the leader of the company, how does this compare to your agency in terms of size of team? Is it comparable or larger or smaller?
So before we sold the business to the US, that team was a bit bigger there, but now we're bigger. We just got to our 12th hire. We're hiring, I think, 3 or 4 more people over the next month and a half. So we're still small. We've seen a lot of situations where there's a lot of really quick hiring and spending money in the wrong places. We really want to focus on hiring the right people at the right time and scaling quickly, but not doing it because we just throw dollars at our problems. We try to scale in a way that's exceptionally efficient and put our dollars towards making a better process for our clients, helping them save more money, and overall building the right products for our business. So hiring is a really interesting thing. And when I speak to a lot of startup founders, I find it's the single hardest thing because you want to find the right people. And I still remember when we started the business, working in the basement of my house. So this is the basement of my house I'm in right now, but this is actually where we spent the first year at our company. It's actually below my garage. So we're like even below.
You're not a garage founder, Jesse. What is this?
I know.
But basement, it's okay. And it's below the garage. So.
We started from the true bottom. We're below the garage. That's like humble.
There you go.
But I remember we interviewed someone who walked into my house and said, "Oh, wow, you work out of your house. Even I have an office." And I was like, wow, that's such an interesting thing to think about, is when you're starting a business, there's going to be people who come on board and say, I want to be part of this rocket ship. I want to be part of this growth. And I get it. And then there's people who just want to come work at a company or just don't understand the fact that you're a small scale and growing business and everything they do relates to the success of the company. So when hiring, that's something that's integral to us, is we find someone that not only fits the role, but also fits the culture of the company that we're building and really wants to be part of something big. And that's something that's always important to us. And we're pretty excited about the team that we have so far, and with the hiring that we have on the way too. a lot of new people that are going to be coming on board that really fit the mold that we're looking for.
So how did you learn to be a good leader and like, you said through your conversations, a lot of the time, founders, that's one of their biggest struggle, finding the right people, onboarding people, growing the team, managing a team, still a manageable size. Like, everybody, it's not, unfathomable how large it is. How have you grown into the role of a founder, CEO?
It's a great question. I think the key thing I'd say right off the bat is I'm lucky that I have a lot of people in my network, a lot of friends that I get advice from on a daily, weekly basis. Even when I started the business, I probably spoke to 50 people to get their advice, from people my age to people younger to people a lot older. And it's incredible that in Canada, especially, I find there's that high tide rises all ships mentality, and people just want to help each other out. And that's been incredible for me, is utilizing my network of people who just want to help out. Also, my co-founder has been really helpful in that matter, being that elder statesman who could provide me the advice where I need. On top of that, we've taken part in accelerators and programs like that, like Next Founders, which I just finished a few weeks ago, which was an incredible training experience for me as a founder, not just to learn about the basics, but they also provide you some interesting information about growing your business, scaling your business, how to hire, who to hire, what they think about when you're with your term sheet, with your financials, and creating a network from there. Because there's even startup founders who I speak to on a weekly basis that are part of Next Founders that just provide a ton of advice to each other. Even yourself, when we first spoke, you provided me some great tidbits. So I just love the fact that there's so much information that we can learn from other people in the industry that help us build who we are. Now, one of the keys to being a startup founder is also having conviction. And you're going to have a ton of opinions and a ton of people who love you and a ton of people who hate you. And one of the keys is believing in your business, but being able to make changes and turns when it makes sense. So that's one of the things I also realize is I have a ton of conviction in our business, and I get a lot of advice from people who push us in different directions. And the key is to take everything with a grain of salt and realize what's actionable, what makes sense, and what you should probably do and what you shouldn't do. I'm also a very big reader. I don't actually read. I'm an audiobooker, so I always say I'm very well listened, not very well read. But I try to read or listen to 1 or 2 books per month, and I listen to a ton of podcasts as well. That there's just so much information out there from people from all different industries. I forget the book I just read. I'll look it up as I'm slowly talking to you.
Yeah,
But
I'm curious your favorite reads or podcasts that you listen to.
So my favorite reads so far this year are both of
favorite listens, since you don't read audiobooks.
Exactly. My favorite listens. So both of Ben Horowitz books are amazing. I listened to The Hard Thing About Hard Things late last year, and then What You Do Is Who You Are this year. Setting the Table by Danny Meyer. Awesome book. He's the guy who started like Shake Shack and a lot of those types of restaurants. And it talks about how every business is a service business. And it was such an interesting mentality. I've referred a lot of people to that book. A Professor Ajay Agrawal, who's actually one of the people from Next Founders, is one of the leaders of that business. His book, Predictive Machines or Prediction Machines, is incredible because we're building an AI business. So my co-founder has all knowledge in that area. I could talk about it, but I'm not an AI person or a machine learning person. So reading books like that have been really interesting. Another really good book, and this will be my last suggestion, is a book called Misbehaving. I've become a big fan of behavioral economics over the last few years. So that's by Richard Taylor or Thaler. I never remember how to pronounce the name, but really interesting book about behavioral economics and why people do what they do. So those are some of my best favorite suggestions. I'm actually right now listening to Jerry Seinfeld's new book, and it's just him reading a bunch of his jokes over the last 40 years. So highly suggest that to anyone who needs a break from just building their brain to someone who just wants to laugh and have a good time.
Those sound like some great suggestions. I'm definitely going to note those down and check them out. That's thanks for sharing.
Awesome. Yeah.
Okay, so before we got into books, you were speaking about going through accelerator programs, getting help and advice in general. You mentioned like that it did benefit you, but you've now had 10 billion, I think you mentioned, of
I don't know the
volume on
exact number. It's give or take 15 or 20 from there. I don't know.
billions in potential deals. How do you remain humble and seek out, advice, or help, and have that like ability to continue to learn and grow? Have you always been like that, or you've realized that it's harder than you thought, the startup journey?
Yeah, it's a really important question because I think there's all different types of startup founders. I remember I read a book about um, three different startup founders in a row. One was Elon Musk. One was I don't even remember who the other one was. And then I read a Tiger Woods book, and they were all harsh people. And I'm like, that's not who I am.
It must
I'm
have
a
been the
nice.
Steve Jobs one in between the
Yes,
both then.
it was a Steve Jobs book. Exactly was. And then I read Shoe Dog. So it was like
Okay.
four books in a row of like harsh people. And I said that's not who I am as a person. Um, so how do I stay humble? I think that's being a startup founder is not easy, and it's glorified on a lot of TV shows where all these startup founders seem like they're having the best time partying, making so much money. But the average startup founder, you're toiling. I don't sleep really well at night. I always joke I've literally bought two beds since I started this business, and it's because I thought it was my bed, but it was really my head. And it's just you stew all night. You're thinking about the business. You wake up in the morning, you're thinking about your business, and it's just nonstop. Always thinking about, okay, this great thing happened today. Okay, what could go wrong with that? How do we make sure that's not a problem? So even though startups have success, the key is, and this is actually something that was taught a lot in the Next Founders program by Professor Reza Satchu, is successes are great and enjoy them, but don't look at that meaning that your business is successful, because until you either scale into a big enough business that you could IPO, you sell your business, whatever it is, the valuation that my business is right now is on paper. So that it means nothing. So that's the key that we always think about is you got to stay humble, because you're nothing until you're somebody. And even those startup founders who have had success, it's unbelievable how humble many of them are as well.
I think we just had a great example of that with Quibi after raising $2 billion and then 6 months later, having to shut their doors.
Yeah.
COVID hit, and for you being an online first business, had that did that affect you in any way? Any changes, pivots needed to be made? How did you experience it?
Yeah, it was a crazy time. We thought, holy moly, we were just in the midst of raising a round of financing, and luckily got the first third of it in, and now we're about a couple weeks from it finalizing, which is really nice because we had about a 4 month delay in between. But we were worried. We're like, what's going to happen to the real estate market? We're all staying indoors. We were all sent home, and as it happened, the real estate market dropped in March and April, and we're like, what's going to happen to our business? But basically, what happened is we went like this. Oh, how do you see me on screen? I'm gonna try to get my hand.
Other side, there we go.
We went up, down, and then we shot up.
Yeah.
And we've had this quarter, as an example, quarter three, we surpassed our revenue from all of 2019, and we've just consistently grown as a business since there. And a couple of reasons why is Toby Lutka from Shopify had a quote that we've probably moved technology forward 5 to 10 years, and that's a lot. What happened is some of these lenders and these classic brokers, they had to completely change their model. We didn't change our model. Our team just went home. And when they went home, all that meant was they didn't have to drive to work for 30 minutes or an hour, or take a subway or a train, because some of our team lives in Brampton or Scarborough or whatever it might be. So we actually became more efficient when we started to work from home. Now, we lost some of the fun part about working with your team. We've tried to do things to circumvent that and replace it in positive ways. But we became a lot more efficient, and it's been a great proof in the poison for us that we were building a business to last in the modern world that we were moving towards. So even though COVID moved it forward, we were well set up for that time, and we really didn't have to change our practices other than maybe spending a little bit more dollars in advertising, because we realized we could acquire more customers during this time.
Okay. Well, yeah, I think you're one of the lucky ones, having that set up. How has it been leading a team through COVID? Because I'm sure, maybe everybody took it super great, but most of the people I speak to, COVID's been pretty rough. How's it been being a leader of a young startup, and dealing with all the angst that comes with lockdown?
Yeah, it's a tough one, because I'm the type of person, I hate instant messengers. I hate Slack. I don't even love emails. I'm an in-person and phone call type of person. And it sounds crazy as a tech person. I don't like messengers, but I've never even been a text messenger. So you lose that. You lose the magic of just asking how someone's family is and how their day is and everything like that. So I think a key is just putting your empathy hat on to the highest level during this time and giving random phone calls to your team members, having just fun team meetings where even once a week we have it doesn't sound like a lot, but it's once a week we have a half-hour meeting, which usually turns into 45 minutes or an hour, where we just play a game and we can't talk about work. You're not allowed to talk about work at all. And it's just fun. And that's part of the things that we try to do is just keep our team enjoying what they're doing, always ask them how they're doing, because I think that's one of the keys during this time is you can't visually see how someone's doing. So have that level of empathy where you just say, hey, how you doing? Is there anything that we could do to make things better? And really just trying to put yourself in their shoes, because it is tough. It is a tough situation. And we always just try to make sure our team feels as comfortable as possible. And we're lucky because we are a small team. We have that tighter bond. But as we continue to grow, that's going to be a key focus for us.
Okay, so speaking about growth and looking forward now, where are you guys heading? Where could we expect Homewise to be in the next year, and what are your future plans?
For sure. So without giving our super secret things that I can't give out just yet.
Don't give out your super secret sauce, but I know you're mentioning AI and like a data platform. I'm super curious if you can dive into that to learn more on that aspect.
For sure. So a big part of our business is providing the right mortgage solutions to our clients. So rather than just applying online and seeing products, the AI that we're building in the background is actually providing the best solutions to our clients based on their unique profiles and consistently learning based on what they tell us. The goal of that is to utilize that in a way to just save clients the most money, make the process as fast as ever before, and then in the end, add other services. So we've partnered with companies like Sonnet Insurance and a real estate lawyer company called Deeded, which is video-based, to really close the loop to make the whole process online. So that's a real focus for ours, is just how do we make the process seamless? How do we make it really easy? How do we have a ton of integrations? We're actually part of a program right now with Intuit, which is another accelerator program where we're working on a partnership with them. So we have some really cool ideas with them on how to utilize their systems as well to really make the clients feel like they have a lifetime experience with their mortgage. So overall, our goal is to have more of the experience with our client, not just mortgage, to make the process faster, make it easier, and make clients have that level of transparency that they never would have had before by making the process just really easy to do, seeing a full overview of their options, and just saving them money in the end. So that's it. That's a bit on the tech side, and on the expansion side, as I mentioned, we are across Canada, so we're just continually finding ways to expand our breadth, expand our overall awareness of our business and our opportunities for client acquisition and growth. And then from there, just see what international growth opportunities there might be available for us to become the beast that we expect to be.
That's awesome. I'm looking forward to following along your journey. To conclude this episode, I'd love to wrap up with maybe some. You did give a lot already of advice to other founders, but for fintech founders who are maybe just getting started now or in the future, are looking to get into fintech, even if they weren't from the space originally, marketing background, design, whatever the case may be. Could you share some advice to these non-technical founders from based on your experience?
Yeah, the first piece of advice I gave was a great piece of advice I got from one of my best friends who's a startup founder who has an exit. And he said, tell everyone your idea.
Yeah, that's key. So many people that I meet have ideas and they don't want to share it. And I think that's a big mistake.
It blows me away. If someone steals your idea, well, shame on you, because they took your idea, thought about it, and made it faster than you did. What I learned from that is tell people your idea, because they're going to poke holes in it. They're going to give you advice. They're going to introduce you to people. They're just going to give you so many ideas that are so invaluable to your business. When I first started at Homewise, the first idea, he actually doesn't work at this business. It was a buddy of mine that I saw on the street in downtown Toronto. He just finished his first year at Harvard Business School. And I told him about a thought of an idea I had. He told me about a thought of an idea he had. And that's how the initial zygote was born, that is Homewise. And it's so funny to see how if I didn't even bring up that conversation with him, if I'd be sitting here today. So that's the first thing I would say is don't protect your startup idea like it's a precious thing, because so many people have thought about it before, I'm sure. And if they haven't and it's completely proprietary, even better. You got some good insights into, is there potential product market fit just by asking your marketplace. You speak about Quibi. My family is all in the entertainment business, and I told them when it first came out it's going to fail. I just said there's no product market fit. No one's asking for this, and it's crazy. Not that I'm clairvoyant. It's just it was pretty obvious when the business released that people in our age range and younger wasn't interested in their content, paying money for it. We already had Netflix. So that's one thing I think is really important. Go talk to people about your idea. The second thing is like, start working, do it, do some tests. There's many startups that I had ideas for, that I wrote out strategies for and build out perceptual maps and all these things I learned at General Mills. And it went nowhere because your meetings turn into conversations, turn into dinners, turn into, okay, this is no longer a business. So do stuff. And if you have an idea that's really good, start building it. Build a business, incorporate a name, buy a URL, do all these different things so that you don't really give yourself the excuse of, I'm not going to do it because I don't think it's going to make me money, or I don't think I should quit my job. If you can't quit your job yet, work on it for 6 months in the background and get working on it. I just think it's one of those, do it or get off the pot. So I don't swear, I'll say it that way. Do it
that
or
was very polite, Jesse.
yeah. Do it or get off the pot mentality. And I think that's the key. Is there's so many sidepreneurs, there's so many people who think they could be one. And until you do it, you're not going to realize how much fun you could have and how much torment you're going to have in your life doing it. But I don't regret a moment of jumping fully into the pool.
I think that's some great advice, and I echo that. So so Jesse, thank you very much for taking the time to share your story, tell us about Homewise, and sharing that great advice. I think I think you really dropped some gems today. So best of luck with the continuation of the Homewise adventure. Looking forward to keeping in touch and maybe reconnecting sometime in the future to see just how far you guys are going.
Appreciate it, Nick. Thanks so much.
All right. Have a great day.
You too.